Welcome to Oil and Gas Investor Headlines for the week ending in January 29th. I'm Heather Rosenbaum. Before we get started, I want to take a moment to thank our sponsor, Navport. For more information on their upstream data solutions, visit navport.com. The reality of the downturn is starting to set in for some companies. Quicksilver Resources is parting with nearly all of its U.S. assets pending bankruptcy court approval to sell to Bluestone Natural Resources. Quicksilver auctioned its U.S. oil and gas assets for $245 million. By debt, this was the third largest E&P bankruptcy of 2015. Quicksilver has been around for over half a century. Other companies are also facing challenges amidst the downturn. Schlumberger announced a net loss of over $1 billion and layoffs of 10,000 employees in the fourth quarter of last year. And SandRidge Energy is leeching money and stock market credibility as it attempts to keep its head above water. The company maxed out its credit by converting its entire borrowing base, giving it $885 million in cash. In addition, SandRidge essentially traded some E&P and midstream assets to Occidental Petroleum to cancel a 30-year contract to transport CO2 produced in West Texas. Consolidation also took hold this week as private company Keane Group agreed to a deal that would more than triple its frac horsepower. Keane said it will acquire Trican Well Services' U.S. assets in a transaction worth $247 million. Keane's CEO says this could be the first of multiple deals for the company. Thanks for watching this week's Oil and Gas Investor Headlines. Hear more headlines this week, including the continuing A&D hot streak in the Delaware and Oklahoma at oilandgasinvestor.com. See you next week.